Okay, so firstly, yesterday I perceived the market as unpredictable, so I didn't trade. Unpredictability is subjective, it's a dopamine trigger, so I risk trading for the sake of trading. So, in order to mitigate that, I don't trade on those days. Um, secondly, my key levels and predictions have been extremely good, which makes me question what's going on. Either my skills drastically increased, or there's more day traders. If you watch my video from yesterday, you would have heard me explain that when the VIX is low, there's less day traders. Basically, people are running portfolios. They've switched from day trading to their portfolio managing. At the moment, it seems to be a reversal, perhaps, but I'm not convinced. So it's more of a hunch, to be honest. A bit why. Okay, so we look at the whys. So given October's a nervous time for investors, perhaps smart money's sold in September. We are at the 27th, so the end of September, coming up to October. So perhaps smart money has sold, and they've got more money to sit in their accounts, so they're trying their hand at day trading. And it's probably been quite successful at it, actually. We're also coming up to earnings season, so I don't know what that means. About mid-October, we should expect some earnings. We do also have a Santa rally that starts every year. Seems to be sooner. I mean, it doesn't really make sense to me, but hey, I mean, they can call it whatever they want, really. Happy season, silly season, whatever. So we have that. I mean, it seems to be early for that, but anyway, it is what it is. And if you was to look at the market, if we look at go daily, that looks ridiculous. We'll go to Nasdaq. I mean, coming up to the end of September, we could see a double top on the Nasdaq. Yeah, it's a W pattern there, right? So I call these W patterns. So double bottoms, you don't expect it to do something like that. But what if we inverse the chart and what if the market does this? What if there's a W pattern there? I mean, I'm not sure. I have to look at the larger time frames, but it's actually can we rotate these? It'd be nice if I could rotate, flip. What if we do inverse again? No, it doesn't work. I'm just wondering whether that pattern there, mean, it's just observation. Like, who knows? Like, maybe that's an impossibility. You know, like maybe I'm just seeing things, but hey, it's possible. Now I'll just quickly go over what the hell I've been talking about here. Put that back here. Okay, so yesterday I was looking at these key levels. That's the daily key level. That one's, I'm not sure what that one is. But you can see how price bounced off that daily level within, twice within 0.3 and 0.6%. So yeah, there's strong buyers there, but it's also telling me that perhaps there's more day traders. If we go back to the previous day, I think it was here actually. That makes this move look really tiny, to be honest. I was predicting a fallback. I was predicting if the market broke up and then fell back, I was looking for a break and retest, which it did. I caught some of that move, but it took forever, and I was expecting the move to move a bit quicker. So the trade was just about perfect. Reached target, and also predicted a possible trade here, but that also would have worked. So yeah, it's raising my eyebrows, to be honest. That about every prediction has just about worked, and I only caught probably one part of one. So that's also something psychological issue where near misses can cause you to overtrade. So you have to be careful of that as well. But today's a new day, and I wouldn't normally be trading on a Friday, but given the circumstances of more day traders, possibly, and there's no certainty in this, which makes it difficult, but you have to read between the lines on just about everything. Buyers, sellers. So we can see here, it's major sellers there, there's major buyers there, and it's held that level really nicely. So that's on a 30-minute too. Normally I go normally I would start way out, but let's go back to the checklist. Okay. So we're our playbook's working. It's definitely making higher lows and higher highs. But are we wanting to trade the market or the NASDAQ? That is the question at the moment. So probably move that one over a bit more, to be honest. This is a trend, there's more opportunity. And there's also more indication of which way we should be trading, whether we should be taking longs or shorts. So there's some kilos here. Now, we want to be trading the cleanest market, the one with the highest predictability. Now I've just saw something. Price doesn't normally do that by accident. Normally in a trend you'd see this, right? Price would go up, and it sort of break. Well, it'll go up sort of maybe like here, and then it'll break that one, and it'll go up there, and it'll break that trend line, and it'll go up here, and then eventually breaks that one. It'll go up here, then it'll maybe break that one. So if eventually it decreases in strength, right? That's interesting to me because it's holding a line. If it closes below that, like that's when all those traders that's piled in here will most likely exit, because that's their criteria for trading. So it's the market. This is the Nasdaq. You can see we're major buyers and sellers. So I'm liking the Nasdaq. It looks a bit cleaner. Normally the Nasdaq outperforms the market. Recently the market's been outperforming the Nasdaq, so that I question whether I think I've already said it before, but whether the market can increase without tech, because tech makes up a lot of the economy now. It's in everything. It's we don't run an economy with coals and iron ore and basic hammers and shovels. It's made with technology. So the bellwether stocks, I suppose you could call them, like your Apple and that. So what is Apple doing? No, not going now. There we go. That's been quite interesting, isn't it? possible. I've got to worry about these levels over here because they're old and they're not very consistent. It's a bit confusing, to be honest. It's a line. An optical illusion. Dull as me. Oh well. So got to draw a line on this one. That's the port line. I don't know what they call them. Who knows? Who cares really? This is a, this is another line here. Referring to like. Okay, we've got our lines in. Few patterns. Not really. I mean, you have to go on a daily maybe, but the patterns, the only patterns I see is a potential W pattern. Sort of not gold, not gold. There's a bit of a reversal here. Now it may make it all the way up there, may not, but if it doesn't, this is more bearish. If it sort of comes reversing at this level, it's making a lower low. If it puts in a lower low, it's significantly more bearish. So it doesn't need to go all the way back up there, like it will be a double top sort of thing, but you know, it could push straight through there, who knows. But if investors are nervous, they'll be selling well before it gets to the peak, you know, to lock in more profits and minimize potential loss. So yeah, probabilities. So this one I just draw sort of fake candles. Probably seen it before, but just Probably seeing something here. I wonder. Market puts a wedge pattern in. That would correspond confluences, I think, is what some people refer to them as, with that line there. That's at 9, so probably, I don't know, 9, go hourly. 9:30 be around there, so that's, yeah, that must be looking good for a short there, perhaps. Bounce, perhaps. I have to check for those bounces. They're not my most profitable trades, so I really need to use them with some footprint charts and the book maps to see if there's resting or sellers or orders up there or something. But you know, we'll see. You could always also say that, you know, like buys down here, right? At bounce. Keep it super simple. Oh, actually, that's lining up there perfectly too, isn't it? Right there. Another confluence. Okay, so I've got two confluences there at the top and bottom, longs and shorts. And some days there is both a long and trades that I'll predict that both play out perfectly. I even had one day where I guess maybe like two longs and a short played out perfectly. Like you could have traded every one of them, but yeah, I guess it just comes down to practice and knowing when the day traders are there and when they're not there, and what they're looking at and what they're not looking at. So to me, that's kind of looking obvious. Like if it goes up there, you'd be looking for a short. It could just as well go straight up and keep going to the moon, but we'll just have to see. That is actually would fit into that little nice channel there nicely. Okay. I don't really see anything else to be honest. Pace to push yourself though, like if price does that. If it does that, it'd be a lower low on the a 2 hour time frame. So we probably could look for a break and retest there. We're just holding these ideas loosely at the moment. More like writing a book, right? It's just maybe, probable, maybe. That'd be a good level. Oh, we're already down point 2. What is that? Oh, 1.3, that's doable. Definitely doable, actually. It's probably a bad day to get me down 3%, so 6, 8, 2%, that's also doable. That's probably more. Interesting. So if it's potentially price could go down there, why am I putting a target there, right? I'm putting it there because I could always hold the move my stop loss down to sort of 1 to there, and then let it run. But you need to lock profits in. You can't always, because the market goes up and down like a lot, right? You can't hold positions forever, because if you only make losses and it only wait for price to retreat and take out your stop loss, you'll never make money. So when price reaches 1 to 1, I'm seriously considering taking profits. Ideally, you want 2 to 1, right? Or even more, like 6 to 1. That'd be fantastic. But if you're always targeting like a 6 to 1, the chances of losing them often have increased. Like you might only, you can either win a lot and win very little, or a lot, very few. So it's psychological too, what you're comfortable with. But reaching for like a happy medium. Like ideally, I wouldn't want to stop loss up there. Like ideally, I want to stop loss here. But if you're predicting the market to go there, 6 to 1 is not very realistic. Like you kind of, it's just not really realistic. Like potentially you are that good and you can. It's like a tiny stop loss, but yeah. I'm giving myself a bit more room, a bit more flexibility, a bit more certainty, being risk adverse, adverse, yeah. Okay, what else we got? There's actually like there's 1, 2, 3 there. I mean, like really? After yesterday, what was we down yesterday? A bit, like from there, from what went up and then come down, right? So there's gonna be some nervous investors there, surely. And that was, what was it on GDP or some earnings maybe? I don't know. I haven't actually checked earnings. I'll check earnings. Data. I've got data. We've got Friday. So 10:30 my time, 8:30 US time, AM that is. Gonna call PCE, personal income, More importantly, at 12 a.m. my time, 10 a.m. US time, you got Michigan Consumer Sentiment Index from Michigan, University of Michigan there. So that's quite significant. It used to be very significant. Probably a little bit more significant than it has been in recent times due to inflation. And so the consumers really, so whether they're spending or not spending is really important for the economy. Let's have a quick look here. So, damn, it's low. So typically it's around 80, right? I'd say anything below 80 is not great. Hit a low in mid 2022. Has gained somewhat some nearing into 2024, but it's not going up very fast. Currently 67.9. That's not bad, it's not great. Obviously if consumers are not spending, the economy's not growing, but they may be increasing their debt and their credit cards and everything else, so we have a presidential election also be influencing that, and I'm not sharing an opinion there. I hope everybody gets their Christmas wishes, but I don't think everyone's going to be happy this year. Game plan. So we've basically and this one's a little bit interesting because the price could very much just bounce on that level there, and we could totally miss the entry, and it could just fly. Like, it's interesting. So price rejected on Thursday. There's probably not going to be as many buyers Friday. But there's obviously, I think there's more day traders there. They'll be looking at the major levels to either buy or sell. There could be sellers here. Double top, so maybe even break and retest, or don't really want to do a bounce there, but we are bounce with absorption, perhaps. We'll see. Candle strength, daily. Yesterday we had that big rejection to the upside there, and who really knows? Interesting. You know, we've got the presidential election, so that could also be moving markets. Perhaps, who knows? So indecision. 0.3, yeah, that's enough, I think. Depending on how volatile the market is. At the moment, it's not. It's pre-market, who knows, eh? But no, it's happy with that. So, if we want to be conservative, I suppose we could wait until 10. 10.03 to 06. Major levels, unless it break a high or breaks a low. Because market's trending, there's no real break or high or break a low, so it's a daily, that's a daily. And that's effectively where I've got trade there. You know, I wonder what we could do. Break and retest there. Price comes back down here and bounces off that daily level, and then I'd want to. It's a little risky though. Where's the time? Friday. We want to be in that there. So yeah, it's possible because I've got to. I really should be looking for longs and shorts, and keeping to major levels. So it's a major level there. So at the moment, I've only got I've only got shorts here. Like the only long I've got is there, right? Just to, so yeah, you could take a position there, but we'll see. 10 a.m. looks good. Last 3 days, you can see prices sold off at 10. Traders will be remembering that recent move from yesterday. Yeah, maybe it's on data, but still. So up maybe here at 10. I won't be looking at a move at sell-off down. I mean, from yesterday, yeah, absolutely could actually. So price breaks here. If price ends up there at 10, you could look for a break and retest there. Price retreats all the way back up there. I'll probably look for a buy, but I want to be conservative at that level, just because we're already down 0.19. We're down on the market 0.7, so it's already a down day. You know what I mean? Like if the market opens there, like if it goes up to break even, what did I say, about 0.2 or something? You're looking at there, so. Where I've got a bounce, potential bounce. Yeah, I don't know about that one. We'll see. We'll see. So 1, 2, 3, 4. That's well and truly enough for a Friday. Actually, what did it do last Friday? I better check last Friday. Monday, Friday. So for 9 and 10. Actually broke through the support at 10. Well, they wouldn't have known it's support back there. Perhaps. This needs to make sense. So I've basically positioned the stop losses and take profits at 2 to 1, so that's great. Bull and bear, we've done that. That's to mitigate cognitive dissonance, because if you've only got shorts or only longs, for example, perhaps you've got a belief and you're trying to prove your pet theory. So that's one of the main reasons I have both bull and bear entries. Because, for example, if the market goes up and you're predicting it to go down and you have no entries at a high level, and it looks like phenomenal, for example, and you've done all this work, and it could be perceived as like a near miss. Like I've got these exits. See if experience a near miss entry, like a bounce play or market moves and breakout, or anything else that feels like a near miss. It's an uncertainty trigger warning. Basically, you risk trading for the sake of trading. You risk falling into that emotional state and just trading, like where you've got your trigger. You get the point. That's a good point. speed of entry, looking about 10 on the shorts. Aggressive, conservative. It's a bit irrelevant when the market's trending like this because it's not forming any structure. It's not going sideways. It's just trending. So basically, we're just looking at levels. It's probably more aggressive at the levels. You know what I mean? It's right, set alarms. See what alarms are up now. And also what I like to do is find the highest probability trade, because obviously they're all potential trades, but like you can't trade like a madman. You've got to, the market's maybe it is that volatile and they all work, but the odds are it's probably not going to be. We're in uptrend, so you probably that. The odds are probably of that one working. If we get a strong sellers, maybe at 10 and maybe 11, maybe we get a break and retest there, and we look for a long position there. Like back up to break even. Not sure. It's like the less risky one would probably be that one. Or that or that one. Or that one. Oh god. Like the problem up here is that price hasn't tested that level. Like it's just gone straight through it. You didn't really like to have a look at. Did find it did really test it a little bit, like for like 15 minutes. Whereas it's tested this support line for days. I mean, since 21, 2, 3, 4, 5, like a week, right? It's held the line. So, notice that these opportunity. Let's check out the VIX. And gold. Okay, we'll check gold out first. Silver is at support, making higher highs, higher lows over the 2 hour time frame. Daily, it's at resistance, looking very good. Now, why am I looking at gold and silver? I'm looking at gold and silver because they perform and break out, and when the market's going up. So they're like every other asset that when like they say maybe Bitcoin's a bellwether indicator for the market, and I mean these are all related in some way, right? But if we have a look at gold, that to me looks like a cup and handle pattern. So you can see the cup form there, little handle, and a breakout of the cup and handle pattern. You can see there that it's broken through, and I'm predicting it to go to about 3,000 would be ideal. You can see the long term. Support and resistance lines there that I've put in that it's broken through. So like you've got to have support there. It's broken through there. It's looking really, really strong. Silver. Quick look at silver. So I mean this is the same sort of deal. Cup and handle. It'll take us out to 50,000. Currently at 30. But I'm expecting something a bit higher. It might take a few years to get there. Who knows? But okay, that's good. Unsidetracked. Pre-market is up. You can see here on that one as like a bit of support. That's a bit of a support line there on the VIX. I mean this is all a bit subjective because some people say you can't use the VIX. Actually, like the line chart's probably a bit better. You can see another nice W pattern there on the VIX there, but that's a day, that's a weekly. It's holding above that middle Bollinger Band. That's interesting. Never seen that before. You can see a bit of support here going back to July 2021. Yeah, that's interesting to me. That perhaps we could see a bit of a rotation, a bit of a sell-off maybe, but certainly not great day trade. I'd certainly want that to cross one of the ideally the upper band on the Bollinger. And then cease day trading when it comes back down to that middle band. But something has changed in the market, and I'm not exactly sure what it is. I'm presuming that smart money sold coming up to October, giving them extra piles of cash to play with. And so these key levels, I keep repeating myself, but anyway. So no, I just can't tick that. Highest quality trades. That level's also matching up nicely with some of these level indicators here. It's probably equivalent, like your middle one's probably equivalent to your moving average lines. I'm not exactly sure how to compute it, to be honest. It's they're indicators, there's no good drawing too much into these. Okay, so that's where we're at. So there's no breakouts, so I haven't got any break of the highs or break of the low game plans. So if there's a bounce that I miss, I need to be really careful of that. And there's bound to be multiple, because price could bounce off this level, and I go, oh no, I've experienced near miss, oh no. But because I've got these other entries, I've sort of mitigated that emotional state trigger. So anyway, that's where we're at. I'll see how it goes.